Hello, this is Fethullah Şahin. I'm a research assistant in Melikşah University. I'm also pursuing my PhD in Yıldırım Bayezid University in the field of banking and finance. Today I will present my paper, Efficiency in Turkish Banking Sector After the Global Financial Crisis. Let's go forward. Okay, the Turkish banking sector before the global financial crisis. First, I will mention the crisis happened in Turkey in 2001 and explain how the sector was affected from that crisis. The banking sector adversely affected from the financial crisis in 2001. The total assets of the sector reduced almost by 50%. Three major private banks stopped their operation. And finally, at the end of the crisis, the restructuring program was implemented after the financial crisis in 2001, and the sector started for a rapid recovery. In 2008 and 2013, as we know, there was a financial crisis started at the end of 2007. The negative effects of the global financial crisis, however, on the Turkish economy as well as financial markets appeared at the last quarter of 2008. The market value of the financial institutions at the end of 2008 decreased from 105 billion US dollars to 45 billion dollars. Turkish lira depreciated against major currencies in real terms in the last quarter of 2008. So basically the financial crisis affected the Turkish economy, but the banking sector was not affected deeply. In 2008, again, total assets of the sector grew by 26% and increased to 706 billion Turkish liras. The return on equity and capital adequacy ratio were realized by 16.4% and 16.5% respectively. When we go to 2009, at the beginning of 2009, the effects of the crisis continued but did not deepen in the Turkish financial markets, especially in the banking sector. During this period, total assets continued to grow, and the banking sector supported the growth of Turkish economy. When we look at 2010, the total assets in 2010 increased by 19% to 964 billion Turkish liras. The return on equity and capital adequacy ratio in the sector was recorded as 17.8 and 17.7% respectively. The ratio of non-performing loans to total loans decreased substantially from 0.9 in 2009 and 0.6 in 2010. When we go to 2012, in July 2012, Basel II was implemented in Turkish banking sector. At the end of 2012, the total asset of the commercial banking sector in Turkey grew by average of 11.3% and it was recorded as 1,298 billion Turkish liras. The profitability ratio, which is return on equity in 2012, declined to 13.7% compared to the previous year. And the ratio of non-performing loans to total loans increased for the same period. When we look at this table, we have the number of banks in the first column, in the first row. In the second row, we have total assets, we have profitability ratio, we have capital adequacy ratio, and finally, non-performing loans to total loans is indicated in the last row. The total number of the banks did not change during 2008 and 2013. Total assets grew enormously from $706 to 1,668 billion Turkish liras. Profitability ratio was fluctuating between 2008 and 2013. Again, capital adequacy ratio and non-performing loans to total loans ratio was fluctuating during 2008 and 2013. In our study, before starting for my study, I just wanted to see you how the total asset grew from 2008 to 2013. Although there was a crisis in 2008 and 2009, the assets grew rapidly during this crisis period. Okay, in our study, we were measuring the efficiency scores of the Turkish commercial banks. Efficiency score data envelopment analysis. First, we will define what is data envelopment analysis. It is a non-parametric method in operations research and economics for the estimation of production frontiers. The input and the output of companies or banks in our study were determined based on the intermediation approach. In order to measure the efficiency score, we have to know what the bank's inputs and outputs. So we use the intermediation approach in order to measure it. So according to intermediation approach, the input of a bank or banking firm are included in here. So the inputs are, in our example, based on the intermediation approach, is interest paid to depositors, or in another name, interest expenses. The second input is labor cost, which is named as personal expense in income statement, and fixed costs, including depreciation expenses and other expenses like rent or IT and etc. So what are the outputs? The outputs of a bank is interest income from the receivables and non-interest income from commissions and etc. And the third one is liquid assets for my study. Okay, after analyzing our inputs and outputs, we found the efficiency scores for Turkish banking sector. The first row in here indicates the average efficiency for domestic bank, number of efficient firms in domestic banks, average efficiency score for foreign banks, efficiency firms for foreign banks, and the last two row indicates the average efficiency and efficient firms for the whole banking sector. So the annual efficiency scores for each bank were measured with quarterly data using the data envelopment analysis between period of 2008 and 2013. So based on our findings on this table, what we found is indicated in the next slide. In this study, we found that average efficiency score of the Turkish banking sector between 2008 and 2013 was fluctuating. So it's not a certain, it's not linear, either increasing or decreasing. First, it is increasing and then decreasing. The average efficiency score of the domestic banks in the sector was declining between 2009 and 2012. However, the average efficiency score of the foreign banks increased from 82% to 90% between 2008 and 2010, and decreased from 90 to 87% in 2013. So in the foreign bank segment, efficiency score were increasing first and then decreasing. What else we found in this study? The ratio of efficient firms in the Turkish banking sector declined between 2008 and 2013. Although the ratio of efficient domestic firms or banks in the sector declined, the percentage of foreign banks or foreign efficient banks increased for the period of 2008 and 2013. So the number of the efficient banks in domestic sector was declining, but it was increasing in the foreign banking segment. And finally, we found that foreign banks operate more efficiently than domestic banks in the period of 2008 and 13. During this period, the foreign banks, or efficiency scores of the foreign banks, was found higher than the domestic banks in Turkey. Again, this is Fethullah Şahin from Melikşah University. Thank you for listening and have a great day. Bye-bye.